Hey friends, if you receive Social Security SSI or SSDI benefits, this is one of the most important conversations you need to hear as we approach 2026. We are now very close to changes that will directly affect how your monthly benefits are delivered, how you access your money, and how prepared you feel when your January payment arrives. These changes are real, they are scheduled, and they apply to millions of Americans who depend on these benefits to cover basic living expenses. This is not about fear or rumors. This is about understanding the system so you can move forward with confidence instead of stress. Right now, there is a lot of mixed information online. Some people are saying benefits are being reduced, others are claiming cash access is disappearing, and some believe they will suddenly need a bank account or risk losing their payments. When people rely on fixed income, even small uncertainty can feel overwhelming. That is why today I want to walk you through exactly how Social Security payments will work in 2026. What options are officially available, and what steps you can take right now to protect yourself from delays, confusion, or unnecessary problems. As we move into 2026, the Social Security Administration is continuing its long-term transition to a fully electronic payment system. Paper checks have already been mostly phased out, and for nearly all beneficiaries, electronic delivery is now the standard. The SSA has made it clear that this change is about security, efficiency, and reliability. Electronic payments reduce the risk of lost or stolen checks, speed up delivery times, and make it easier for the system to track payments accurately. While the intention may be positive, the adjustment can still feel difficult, especially for those who have received benefits the same way for decades. Under the 2026 system, benefits are delivered using approved electronic methods. The most common method is direct deposit into a bank or credit union account. For people who do not have or do not want to use a bank account, there is also the option of receiving benefits on a government-approved debit card. Both options allow access to cash through ATMs, but they operate differently and have different rules. Understanding these differences is critical because your choice affects fees, access, convenience, and overall control of your money. If you already use direct deposit, your payment process will likely feel familiar, but it is still important to double-check your information. Direct deposit sends your monthly benefit directly into your checking or savings account on your scheduled payment date. It is considered the safest and fastest option, and it typically does not involve additional fees. However, even one small issue, such as a closed account, incorrect routing number, or outdated information, can cause your payment to be rejected. When that happens, resolving the issue can take weeks. This is why reviewing your My Social Security account before the end of the year is so important. Making sure your bank information is accurate now can prevent a stressful delay later. For beneficiaries who do not have access to traditional banking or prefer not to use it, the SSA offers a debit card option, often referred to as the Direct Express card. With this method, your monthly benefit is automatically loaded onto the card. You can use it to make purchases, pay bills, or withdraw cash from ATMs. This option ensures that people without bank accounts can still receive their benefits electronically. However, it is important to understand that not all ATMs are the same. Some withdrawals may come with fees, and there may be limits on how much cash you can withdraw at one time or within a certain period. Being aware of these details helps you avoid losing part of your benefit to unnecessary charges. Cash access is still available in 2026, but it no longer comes from receiving and cashing a paper check. Instead, cash access is tied to your electronic payment method. Whether you use direct deposit or a debit card, you can withdraw cash at ATMs that are part of the appropriate network. This requires a little more planning than before. Knowing which ATMs are nearby, which ones are fee-free, and how much you can withdraw helps you manage your money more effectively throughout the month. In addition to payment delivery changes, benefit amounts are also being adjusted for 2026 through the cost of living adjustment. The COLA for 2026 is set at 2.8%. While this increase is automatic and does not require any action from beneficiaries, many people feel that it does not go far enough. Rising costs for rent, groceries, utilities, insurance, and medical care continue to put pressure on fixed incomes. For the average Social Security retiree, the COLA results in an increase of around $56 per month. SSDI recipients see an average increase closer to $44, and SSI recipients will see the maximum federal benefit rise to $994 per month. At the same time, Medicare Part B premiums are increasing, and this is something many beneficiaries feel immediately in their monthly payments. For most people enrolled in Medicare Part B, these premiums are automatically deducted from their Social Security checks before the money ever reaches their account. That means even though you may hear that your benefit is increasing because of the COLA, you may not actually see the full increase in your bank account or on your debit card. A portion of that adjustment is taken right away to cover higher healthcare costs, leaving you with a smaller net gain than expected. When you sit down and compare last year's payment to the new amount, the difference can feel discouraging, especially when everyday expenses like groceries, rent, utilities, and insurance continue to rise faster than benefits. This reality makes careful budgeting and forward planning more important than ever, particularly in a system where payments are automated and there is less room for flexibility or delay. For people receiving disability benefits, the payment process and income rules require even closer attention. SSDI recipients who are working or attempting to return to work must remain within strict income limits set by the Social Security Administration. Exceeding the substantial gainful activity limit, even by a relatively small amount, can put your entire benefit at risk. In some cases, going over the limit can trigger a review, suspension, or even termination of benefits. Because both payments and income reporting are increasingly electronic, discrepancies are often identified faster than in the past. Earnings reported by employers, banks, or tax records can be matched against your benefit file, making it easier for the system to flag inconsistencies. This is why accurate record keeping is essential. Keeping track of hours worked, gross earnings, and payment dates can help protect you if questions arise. Even small mistakes or misunderstandings can lead to overpayment notices, repayment demands, or long delays while issues are reviewed and corrected, all of which take time, energy, and emotional effort to resolve. Social Security retirees who are still working and have not yet reached full retirement age also need to be especially mindful of earnings limits. In 2026, you are allowed to earn up to a specific annual amount without losing any of your Social Security benefits. However, once your income goes above that threshold, your benefits are temporarily reduced according to established rules. This does not mean the money is gone forever, but it does mean your monthly payments can be smaller than expected during the year you exceed the limit. Once you reach full retirement age, these earnings limits disappear entirely, and you can earn as much as you want without affecting your Social Security payments. While these rules have existed for many years, they take on greater importance in an automated payment environment where income data is monitored more closely and adjustments can happen more quickly. Another question many beneficiaries have is about stimulus payments and how they would be delivered if approved. While there is no guaranteed stimulus scheduled for early 2026, it is important to understand how the payment process would work if new legislation is passed in the future. Any approved stimulus payments would be sent using the same payment method already on file with the Social Security Administration or the Treasury Department. That means beneficiaries who receive payments by direct deposit would see stimulus funds deposited directly into their bank accounts, while those using a debit card would receive the funds loaded onto that card. There would be no separate application process for Social Security, SSI, or SSDI recipients. This makes it especially important to ensure that your payment method, mailing address, and personal information are accurate and up to date, because outdated information could result in delays or missed payments. As January 1st, 2026 approaches, there are several practical steps you can take now to reduce stress and avoid problems later. Confirm your payment method and make sure it is active, accurate, and working properly. Log into your My Social Security account and carefully review your benefit amount, payment schedule, and personal details such as your address and banking information. If you use a debit card, take the time to learn which ATMs allow fee-free withdrawals, how often you can withdraw cash, and what limits apply. Understanding these details ahead of time can prevent unnecessary fees and frustration. Finally, adjust your budget based on your actual net benefit after Medicare premiums and other deductions, not just the advertised increase, so you can plan realistically for the months ahead. It is also a good time to look into additional assistance programs if rising costs are stretching your budget. Programs such as food assistance, energy assistance, and prescription drug support exist to help people on fixed incomes. Eligibility often depends on income levels, and applying early can sometimes make the process easier. These programs are designed to supplement your benefits, not replace them, and they can make a meaningful difference in your monthly expenses. I know this is a lot of information to absorb. When you rely on benefits to survive, even small changes can feel overwhelming. But knowledge truly is power. Understanding how the payment system works gives you control and reduces uncertainty. The changes coming in 2026 are not meant to punish beneficiaries, but they do require awareness and preparation. You are not alone in this process. Millions of Americans are adjusting to the same system, asking the same questions, and planning for the same challenges. Staying informed, checking your information, and taking small proactive steps can help you avoid unnecessary stress. These systems work best when you know how they operate and what is expected of you. If learning about these changes has helped you feel more prepared, that is exactly the goal. The focus is not just on receiving your benefits, but on receiving them smoothly, safely, and without surprises. As we move into 2026, take things one step at a time. Confirm your payment method, understand your benefit amount, and plan your budget carefully. With preparation and awareness, you can move forward confidently and handle these changes without fear. We will get through 2026 together, informed, prepared, and 1 month at a time.